Welcome to Investor Copilot. I am Viraj, and today we will discuss an important topic for Canadian investors, and that is how to purchase US securities, whether it's stocks or ETFs, in Canadian dollars. So let's get started. Now, let's first look at a typical scenario. If you want to purchase US securities, what is the sequence of events that you'll have to go through? Let's assume you have $1,000 in cash, Canadian dollars, in your trading account. The first, you'll have to place a request with your brokerage to convert this amount into US dollars, and you will lose about 1 to 1.5% in this conversion. So there is also a 1 day delay, at least 1 day delay in conversion. When once you convert your money, you have $1,231 available in USD in your trading account. Now, let's say that you are able to make the purchase of US stocks that you choose for and go ahead and purchase those. The next up, what you will see is that let's say that there is a market scenario which causes Canadian dollar to get stronger and US dollar to get weaker, because this is the most likely indication for the next 2 years, and there will be many occasions that this can happen. Now, if Canadian dollar strengthens, you will lose 2 to 3%, or in worst case scenarios, even more, to FX fluctuations, foreign exchange fluctuations. So that can happen to your investment as well. Your US dollar holdings will decline in value. Now, let's say that you weather all this and through the storm, and you are able to find an opportune moment to book your profits, sell your US stocks, and you're able to do so. You again have to go through the hoop of converting your USD to Canadian dollars, because as a Canadian investor, ideally you would want to have Canadian dollars in your trading account available. So this is the sequence of events. You may end up losing 3 to 3.5% of your profits because of this, and there will be some delays as well. So it's not an instantaneous process. It is not user friendly, and there may be other issues related to market scenarios that you may have to face. Now, to avoid all this, there is an excellent way to purchase US securities in Canadian dollars, and we'll look at that today. So the way is Canadian Depository Receipts, CDRs. CDRs are a relatively new instrument on the market. They are floated on the new exchange, as you see. This is not TSX, this is a different exchange operated by CBOE Canada. So what CDRs do for you is a multitude of things. Let's look at the features here. So CDRs relating to some of the largest US companies listed on NYSE and NASDAQ are now trading in Canadian dollars on this exchange. Flexibility of investment through fractional ownership of US stocks is something that they provide. Fractional ownership means that you can buy even a fraction of, say, one Tesla share or one Microsoft share or one Amazon share. They have a high value, their valuation is high, so you can buy a fraction of even one single share. That's what it means. Your exposure to US dollar currency risk is minimized through built-in currency hedging for CDRs and allowing you to own the company, not the currency. Now remember that when you buy a US security, you want to trade the security, you want to hold the security and reap the benefits from that security. It could be stock or ETF, but you're not looking to buy currency. So you're not trading foreign exchange. You're looking for an asset which will appreciate on its own, and you're looking for the benefits of that asset. So that is what CDRs achieve for you. There is more information on this brochure. Let's look at quickly look at the summary of advantages. So exposure to US stocks in Canadian dollars, straight away a great advantage. More affordable access to world's largest companies, buy or sell like any ordinary stock or ETF, which means that CDRs are traded actively on the new exchange. They are available on all discount brokerages to trade for you, and they trade like an ordinary TSX stock or ETF. Offers protection against currency fluctuations because they are hedged for Canadian dollars. So Canadian dollar strengthening or weakening does not impact your holdings at all in that sense. eliminates need to convert Canadian dollars to US dollars, so you save that 1 or 2 days and you don't have to go through the hassle of putting a request to your brokerage to convert your currency. And low foreign exchange costs obviously is an advantage. So a lot of advantages to CDRs. They have been around since last 3 or 4 years, since 2021 to be precise, and a lot of Canadian investors are showing interest in CDRs. Great way to hold US assets. I also want to show you something of interest. If you go ahead and look at your watch list on Yahoo and Yahoo Finance and go ahead and add some CDRs next to US holdings, you have a great way of comparing the day-to-day, like the daily price movement between CDRs and uh, the original US stock being traded or NYSE or NASDAQ. So you can look at the day-to-day to make an exact comparison. And from my study, I'm finding that most of the CDRs and the original US stock, they move in relative unison. They are not exactly synchronized, but there is not a lot of difference that I find, and the curves are quite parallel to each other. That is what I find. So this is a great sign that the CDRs follow the price movement of the original stock. So please take advantage of this, and hopefully we will do some more sessions, educate you more on Canadian depository receipts. Thank you very much.